Hey, good morning, everyone. Coach Chris Cotton here from AutoFix Auto Shop Coaching. I'm seeing some of the participants still coming online here, so I'm going to talk for just a second, and then we'll get right into the topic. I know we only have an hour. Typically, this is a class that I do in about 4 hours. So I really want to give you a good breadth of knowledge on this, and then maybe if you want some more depth on it, you can reach out to me individually, or you can listen to some of my podcasts out there and or some other webinars we've done. I have done another webinar with AutoLeap that's out there and available. So I'm going to go ahead and start sharing my screen. I've got Will here that's going to help me if whenever we get ready for questions. We're going to open up the chat and do that. Just make sure to write down any questions that you might have while we're talking, so we can come back and get that covered for it. Okay. All right. So everybody should be able to see my screen now. So again, this is the Auto Shop Profits and Cash Flow class. One more time, I want to thank AutoLeap and thank AutoLeap for putting on the Amplify. When they first reached out to me about this, I was like, man, that sounds like a great idea. Can't wait to see how that goes. Hopefully you're having a good experience so far, and hopefully we can open your eyes, some things that you didn't know. If there was one thing that I could teach or give everybody, it would be how to be in control of your auto shop profits and cash flow. Okay. This is one of the most important things in your business, and really affects how shop owners operate. A lot of times shop owners reach out to me and they're like, Chris, I've got like 8 checks to myself that I haven't cashed in the top drawer of my desk. And we've got to stop that cycle, right? You have to be in control of your business. You have to be in control of your cash flow. And for crying out loud, you should be able to cash your checks, right? Like you've got a business. You didn't want a hobby, I think, when you started this. So again, my name is Chris Cotton, President, AutoFix Auto Shop Coaching. We work with great shops all across the country. So why is cash flow important for an auto repair shop? Cash flow is important for an auto repair shop, just as it is for many businesses, or just as it is for any other business. It represents the money coming in and going out of the business, which is crucial for maintaining its financial health and long-term viability. Here are some reasons why cash flow is particularly important for an auto repair shop. Operating expenses. Auto repair shops have regular expenses such as rent, utilities, salaries, and insurance. Proper cash flow management ensures that these obligations can be met on time, helping the business avoid penalties, late fees, or even legal issues. Inventory management. Auto repair shops need to maintain an inventory of spare parts, tools, and equipment to provide timely services to their customers. Adequate cash flow ensures that the business can keep the inventory well stocked and up to date, preventing potential delays or loss of customers due to unavailability of parts. Hopefully, none of you have ever been in the situation where you've needed parts for a car and you're cash only with a part supplier, and you're trying to figure out how to move stuff around just so you can buy parts for this car so you can get it out and collect the money. I hope that's not the case. Sometimes it is. Seasonal fluctuations. The demand for auto repair services can vary depending on the season. For example, there might be more demand for services during the winter months when vehicles require maintenance to cope with harsh weather conditions. And if you're in an alternative climate, that can be the case other places as well. Proper cash flow management allows the business to navigate these fluctuations and maintain a steady income. Business growth. To expand the business or invest in new equipment, an auto repair shop needs to have healthy cash flow. This enables the shop to take advantage of opportunities for growth and remain competitive in the market. Emergency situations. Auto repair shops may face unforeseen challenges, such as equipment breakdowns or natural disasters or pandemics, right? Like I started to add that in there, but I did not. COVID had some adverse cash flow in the beginning, but then with the PPP and the idle loan money, that's kind of straightened itself out. If not nationally, oftentimes locally, some things can be happening to where whether there's a road change or construction in front of your business, there's always something going on that can affect it, right? all of which contribute to better customer experiences. Debt management. This is super important right now, and could be with the way of the world, the way things are going. Some auto repair shops may have taken out loans to finance their operations. Healthy cash flow ensures that they can make timely repayments and avoid defaulting on their debts. And finally, attracting investors. Investors, potential buyers, and lenders are more likely to support a business with a healthy cash flow. This demonstrates that the business is well managed and has the potential for growth, making it an attractive investment opportunity where people might, somebody in your competitive market might be going out of business. They might be selling equipment. All kinds of stuff has happened and has been happening in the last year or so. So in summary of this part, cash flow is essential for the financial health and stability of an auto repair shop. Proper cash flow management helps businesses meet their obligations, invest in growth, and maintain a strong reputation in the market. Okay. So can we all agree at this point in order outlook on that and the way you think about it? One depth, and that's my thought on that. Hopefully most of you have employee handbooks. You have clock in and clock out procedures and at least 20 other procedures in your business. When you go to sell your business, those are all going to be important things to have. And recently I learned that one of the ways we're evaluating businesses now is we take EBITDA or net income, and then there are multipliers for that depending on some of the other things that we have, like is the owner out of the business and not working in it? Do we have processes and procedures going? Things like that.
Hi, everyone. We realize Chris is freezing a little bit on his end. So can we just, we're going to check real quick and see if we can address this, but appreciate you pointing that out in the comments. We're going to try to address that ASAP right now. Back to you, Chris.
I apologize for that for everybody. Okay. So I should have my screen back up here and we're going to keep going on. Sorry about that. So unfortunately, I always start off this talk or this presentation with this statement. And if I didn't hear from people all the time about this, or if it stopped being so common, then I would stop mentioning it. I get contacted by shop owners every week, sometimes daily. I'm in trouble. I can't pay the bills. And usually one of the bills they can't pay is the sales tax. You have to remember, sales tax doesn't belong to you. Sales tax is always sales tax and comes out before you do anything. It's a pass through, excuse me. Also, I see a lot of shops that have sales tax on their income statement. Sales tax doesn't go on your income statement. It goes into your assets and liabilities on that side of the business. So you should never even see the sales tax in there. And then one of the things we're going to talk about is how to have a bank account that we have that money in. That way we don't see it. It's out of sight, out of mind. And as the money comes in, one of the first things we're going to do is send the sales tax straight to its final resting place before we process any of the other things or do any other allocations or anything. It's going to be a separate bank account in a separate bank if you can, out of sight, out of mind. So at this point, we've done over 100 allocation setups with this process, the Auto Shop's profits and cash flow system. These are the current industry averages in the starting allocations. For operating expenses, which is what OPEX is, it's 30%. And these are all of total sales or total income. Parts is 25%, payroll at 35%, tax at 5%, and this is your income tax. We're going to talk about that just a little bit later. Profit at 5%. And again, this is a percentage of total sales. I'm going to share with you a demo allocation worksheet in a minute, and it's also going to have debt on there. Most oftentimes shop owners contact me and they're like, hey, I want to get this debt under control. So we add that in there. Also, I was teaching a class one time and I asked the shop owners, is there any other things that you would like to have an allocation for or put money towards in your business? And the guy's like, I want to buy an airplane. And I'm like, that's perfectly fine. I hope you get your airplane. We just need to make sure and set this up and put an airplane. So I want to back up just a second and also say this system, I don't want you to take it literally and be like, it has to be so rigid that you do it the exact same way. I realize all shops are different. You're in different markets, different categories. You have different rent structure. Your business may have been paid for 30 years ago. Find a system and a process that works for you and then use the process. Okay. So those allocations that we were just talking about, those are all starting allocations. In the end, I want you to be at the following list that I'm going to share with you, or better. Anytime I'm talking about numbers, if you see me a year from now talking in a class, if I give you a target number, I want you to remember OB or better. I want you to meet those targets and exceed them. Some people are like, oh, Chris, my parts margin is 55%. We're trying to get it a little bit higher. And then I talk to them a couple months later or through the process, they're like, hey, my parts margin is 68%. Is that too much? As long as the customers aren't complaining and you're not having any issues with it and you're able to give them great value, then no, that's not too much. I want you to get what you can get in your area and use that for you. Okay. A lot of times we go to meetings and everybody's like, oh, we're pounding these numbers in the sand. And you have to be exact to those numbers. Remember, or better. Okay. So in the end, I want your business to be operating expense 20%. That's again of total sales. I want you to build a lean machine as much as you can. Parts 20%. And the payroll 30%. Now I know some areas with recruiting, technician hiring, service advisor hiring, payroll seems to have gotten a little bit out of hand. If I'm being honest, I could probably move this top payroll number up just a little bit, but I still want total payroll, technicians, shop owners, service advisors, everybody with the tax and benefit load to be about 30% of total sales. Again, tax 5%, and we're going to talk about that later and go over what we should do with that. And then profit, if you have $1 million a year shop, I want you to have $250,000 cash flowing through the business and set aside in the bank at the end of the year so that you can do what you need to do with it. And again, profit does not include store owners' pay. Profit is what you have left over at the end of the year. Okay, just checking the chat real quick just to make sure I'm still online. Okay, good. And again, or better, meet these targets or better. So in order to figure out your allocations, you have to look at your income statement. So Will's not prepared for this, and I probably should have prepped it a little bit better. I should have made this a poll question. How many of you out there have income statements that if you called me today and said, Chris, I need help, and I was like, email me your income statement for January and February of this year, how many of you could go to QuickBooks or wherever that lives and send it to me immediately and know that it's caught up and ready to go? What we find is a lot of shop owners don't. It's not up to date. They're 2 months, 3 months, 4 months behind. I had a shop owner reach out to me about a year ago wanting to sell his business. And that was 2022. I said, send me your income statement. And he goes, well, we about have 2019's ready. So he was 2 years behind from the income statement. Income statement is really one of the places to go for KPIs to see and how to make fixes to the business. AutoLeap's dashboard's great. Some of the other ones in the industry are good. But you really have to look at your income statement in the end to know exactly where you're at. And I want you to be no more than 5 to 7 days out from having an intact, up-to-date income statement. So the first thing we're going to do is we're going to take that income statement. If you've got highlighters, you can get 4 or 5 different highlighters and do those colors that way. And what you're going to do is you're going to break it down into the operating expenses, the labor, the parts, however you have that arranged on your income statement. I need you to look at that and figure out what your percentage of 100% actually is. Okay. So when we find those percentages, we're going to put them on an allocation tool. I'm going to show it to you here in just a minute. And then we're going to reduce our percentages. And it's not a quick process, right? These are some things that may take a couple of months. In the end, we're going to set up like a quarterly plan. We're going to come up with the initial plan, and we're not going to adjust those until the end of the quarter. We're going to let a whole quarter roll out before we change anything. But also realize that the higher your sales are, the more in line your numbers become. Okay. So I'm gonna have to get out of this for just a second to show. I'm sorry, it won't let me back out of here. Okay, here we go. Sorry for that. I just wanted to make sure I got the right one pulled up. So you can have something just as simple as this, and this is what I use. This is what we build for our clients that are going through it. And then you just go, this is also something that I use in my business daily. I know Mountain Time, all my deposits hit at 8:30 in the morning. So I go in, look, and then make my allocations. But again, right down here where it says does not include sales tax, before you even start this, you look at your sales summary for your business sheet or whatever SMS system you're using, see what your sales tax was, take that money out of your income account and put it over into sales tax. Out of sight, out of mind. Let's get rid of that straight out the gate. Okay. So say you only do weekly deposits, or you let all your cash stay in your account and you don't make allocations until Monday, and say you had a $35,000 week. You take your sales tax out, and then say your total sales was like 39,000, and then what was left over was an even 35,000. You're just going to pop that 35,000 into income. And then if you notice here, I've got profit 5%, debt 5%, because we're going to repay some loans on the business. Income tax or IRS is 5%. Operating expense is 30%. Parts is 25%. Labor payroll is 30%. Okay. And then I also have the targets out here because I want you to know what we're working towards. So you pop that number in, you put the money in, and boom, it gives you your allocations all just like that. And then all you have to do is you go to your bank accounts and you transfer what's in your income into these other accounts. Now, in the beginning, it's going to be a little wonky because you're going to have to figure this out. And there's some times where you're going to have way too much money in the parts account, not so much money in the labor payroll, or you're going to have money in debt or profit, and you're going to be tempted to move that money out. Let it ride. If you need to transfer a little bit of money into labor payroll or parts, I'm fine with it, but I also need you to write it down, and we need to repay that account that's out. The other thing is once we do that, we got to figure out, why is labor payroll high? Why is our parts cost high? Things like that. Okay. And then, so again, just, you can build a simple tool. If your sales for 1 week are $47,888, then boom, your allocations go in there. It really takes all that out of there. So I'm going to swap that over. If somebody could tell me real quick if the screen share switch back to my slides, just to make sure. I don't want to be stuck on that other slide and not, or actually I can just go to new share. Okay.
Yep, I can see it on my end, Chris.
Okay. I just want to make sure that I didn't get away from you. So, and again, I realize I'm going really fast through this because I've only got an hour and I want to leave it open for questions at the end. But again, write down a ton of questions. We'll get them answered and then we'll go from there. Okay. So not usually, 99% of the time, the biggest hurdle to this whole process is the bank account setup. I've got people that have done this in a week or a couple of days, and I've got people that have dragged this out for 3, 4, 5 months. And usually the hurdle or the why they quit is the bank account setup. We want several accounts, all with no fees, for having a zero balance. Tell your banks that we're looking at having up to 6 accounts at their bank, and not so much at another. I actually need to change the slide. I'm fine with you having 2 different setups at one bank, as long as you have different logins and different passwords for each set of accounts. So you would have about 6 accounts at one bank and 3 at the other. And we're going to talk about what those 3 are going to be here in just a second. There are several big companies that you can negotiate with. Some are better than others. Some have changed a little bit, but also look at local credit unions, online banking, that you can do immediate transfers on are the best. That's the ones that I like. You go in, you see your income and you transfer it out. You can have savings account for the sales tax, tax hold, and profit hold accounts. I'm also okay with you having a credit card that you use for parts if you're collecting points, etc. But the second you get the statement or whenever you have money, I want you to pay on that bill. I don't want you to be at the end of the month and have $6,000 on a credit card and not have the $6,000 to pay that. I'm a shop owner. I'm a business owner. I completely get having points and everything else like that, but I don't want you carrying dollar amounts on credit cards into the next month. Again, so the second you get that statement, I want it paid off with the money you have set aside in the parts account. And if we don't have enough money set aside in the parts account, we got to figure out why. Okay. Is it because our cores aren't getting returned? Do we have broken parts? Are our margins not high enough? That's the other thing, is if your margins are not high enough, you're not going to be at that 20, 23, 25% parts range. So when we look at these bank setups, we're going to have 2 banks or 2 accounts. Actually, I'm going to make myself a note to change this slide. Bank 1 is going to have, or account 1 is going to have your income tax in there, your income tax holding. It's going to have your debt if you have any debt on the business, or if you want your airplane account, then you label this your airplane account. Profit, OPEX or operating expenses, parts, and payroll. Now, if you are a big shop that does a lot of tires, then we would add a tire account to this so that we can set that money aside. And to quantify that or talk about it, how big a shop is that big, if 15 to 25% of your revenue comes from tire sales, road hazard sales, things like that, then you need to have a separate account for tires. Okay. We're also going to have this other holding account where we put the sales tax until we make our report and pay it at the end of the month. And then we're going to have a tax hold and we're going to have a profit hold. And I'm going to talk about why here in just a minute. And again, these are all or can all be savings accounts if you want them to be. Okay. So after you set the bank up, then it's time to start making allocations, right? We're going to do sales tax at the end of every week, other allocations after that. This is all about building and keeping a rhythm. Once you get in the rhythm, you're going to keep it up. We're going to make adjustments quarterly. Remember, small increments when you do make the adjustments. Don't change one account from 20% to 25%. Do 2-3 percentages. We're going to need a 4, 8, or 12 quarter plan for some businesses in order to get this lined out. I talked about parts, why the parts account could be off just a little bit, but also on the labor side of the business, the way your labor could be flipped is because we don't have a correct pay plan for certain people. Our tax and benefit load is off. There's some things in there that we need to look at. Maybe it's time to raise our labor rate. We used to do it yearly. Now I'm telling my clients, let's do a labor rate change quarterly and go through that process that way. We have to be updating what we're doing for pay, benefits, technicians, service advisors, everybody. So if you're not meeting your targets in those allocation blocks, then there's something wrong. And it could be, you might have your parts margin correct, but our sales are just wrecked for some reason. Say somebody was affected by the pandemic and they were closed for 2 weeks. Then you're going to have a blip on the radar for that. Okay. So don't look at this and be scared. Okay. So this is the way the whole thing, flows out if you were to add it all into one chart. Okay. So we've got weekly, quarterly, yearly. And then we've got monthly down here. This is how we pay our vendors. I'm going to talk more about that here in just a minute. Okay. So customer pays the invoice, and then you get the direct deposit in the income account. And we are going to have a separate account for income. That way we only have money coming into this one account. First thing we're going to do is we're going to rip sales tax out of there and send it to its final resting place. Okay. Sales tax goes into its other sales tax holding account on a weekly basic, and then we pay that at the end of the month or whenever your sales taxes are due. And then we're going to make our allocations daily, weekly, however often you do that. You're going to have your payroll, parts, operating expense, profit, debt, and tax. Remember, the term I gave 110% drives me nuts, because when it comes to money and finances and financials, all you have is 100%. So if you start playing around with these numbers, if one goes up, then another one has to come down, or if one goes down, then another one should go up. Okay. So quarterly, at the end of every quarter, so here we are, almost the last week of March. We've made allocations in January, February, into March. At the very end of March, we're going to take the money that we've got in some of these these accounts, like our tax account, our profit account, and we're going to do two things with that. We're going to make a disbursement if we need to, and then we're going to put it in this other holding account. So if you're set up to pay your taxes quarterly, you're going to use this money from this time to pay your business taxes for that quarter. If there's any money left over, then you're going to put it into that other account that I showed you just a second ago that was tax hold. I'm just going to go down the line. So debt, you would just use that to make any debt payments for the month. If you have extra, pay it out of there. As far as the profit goes, you're going to do the same thing with profit. Say you made, or say your 2% of all your allocations was $10,000 for the quarter. It's okay. Now talk to your tax person, accountant, whoever, tax attorney. But I'm fine if you take half of that $10,000 and do it as a draw to yourself. But then I want you to put that other $5,000 aside in this profit hold, this profit hold down here. And I want you to let that ride until the end of the year. Just in case something happens, we've got a backup for the backup. And we've got that in there. So the other thing, some often get questions, okay, Chris, how much do I pay myself as an owner? My expectation is in this business, you're paying yourself $70,000 to $90,000 a year, and you're making enough money that you can do a profit disbursement at the end of the month if you want to, and hold the rest over. Okay. And then of course, OpEx, parts, payroll, you're paying those as you go. If you get billed monthly, great. If you use a credit card, fine, but just pay it off. The reason why I don't like credit cards for it is because it's really, really hard to go through a credit statement, I believe, and make sure that you've gotten all the parts and everything's, out. I really want a statement at the end of a period from the parts house that has every invoice, every credit listed, and then I can go back and match everything on there. I'm a little bit old school that way, but I see a lot of people getting in trouble with the parts because they can't reconcile that. Okay. So we're going to do this every week, every quarter. At the end of the year, you're going to make your final disbursement. I'm super big in trying to get my taxes in so I can get them done and figure out how much I owe and get that check out and be done with it. Hopefully your income statement is ready at the very end of that. Hopefully by the middle of January, you've got that ready to send to the accountant. And then what I want you to do is whenever you hear back from the accountant how much you owe, hopefully it's less than what we've got in this final tax or this tax hold that we've had. And say it's $18,000 and you've got $32,000 in there, you stroke a check to the IRS or do a direct deposit, pay it, and it's over with. Now, when you do that, then that's when you get the fun conversation of talking to your accountant, tax attorney, whatever, again, and say, hey, I've got an extra $8,000 in my final tax for last year, and I've got $62,000 in my final profit for the year. What do we do with that? How do we pay that out? Do we roll that and pay into debt? Do we write yourself a check or a draw for that? What do we do with that money? Because I want you to clean those accounts out and then start from scratch the next year. It's a great position to be in. I wished I ran my business when I had my repair shop back in the day this way. I did not. I learned some lessons the hard way. And for me, I didn't know what I didn't know. So, I'd have an income statement at the end of the year, do taxes, and be like, hey, you show that you made $150,000 at the end of the year. I would go back and I would look and I'd be like, okay, I don't even have 2 nickels to rub together at the end of the year. Where is this money? Where did it go? And unfortunately, your accountants and people like that, they're not there to teach you that. They're just there to make sure your books are straight and to keep you out of trouble with the IRS and to keep themselves out of trouble with the IRS. And really, it's up to you to figure that out. And again, if I had one thing to give every shop owner in the country, it would be this right here. And I know it looks super complicated, but really it's not that complicated. The big thing is, like anything, just getting in and getting started. Okay. So if you look on that last slide we were looking at down at the bottom, I had monthly, the 10th and the 25th. How many of you have vendors out there that dictate to you, or excuse me, how many of you have customers, like if you're into heavy fleet, they dictate to you when they pay you? That's kind of your prerogative as a vendor, as a customer, as somebody that's doing business with somebody else. Hey, we only pay on this date and this date. So any invoices that you get before then or then are not going to get paid until this date. I want you to have a process for that. It doesn't have to be the 10th and the 25th. Remember, I said you can be flexible with it. You can do it on the 15th and the 30th. It doesn't matter, but have dates where you do that, and that's when you pay the bills. When I had my shop, if you've listened to me or follow me, my wife's name's Kimberly. Kimberly she would have everything reconciled, bring me a big stack of invoices this tall and put them on the corner of my desk. And that's when I did the vendor shuffle or who got paid when. I would be like, okay, I'd look at my bank account and I'd look at it and be like, okay, I have enough money to pay this one. And then I'm like, okay, I have enough money to pay this one. And then just go through the list and I would shuffle it like a Tetris puzzle and be like, okay, these people can get paid. Those people can't. I would hand the stack back to Kimberly. She would do the checks and whatever. And then I'd be left with a stack of invoices that I couldn't pay because I didn't have the money available. Use your money on your schedule, your process and procedure. When you do this, it's a great thing because you have that money sitting in those accounts and you're like, oh, that's a parts bill, pay it. Oh, that's that, pay it. This is part of the labor cost, pay it. Payroll comes out every 2 weeks. You've got the money in the account to bang payroll out and you don't have to stress or worry about it. Okay. Pay your bills on your time schedule. Pay on the 10th and 25th or whatever that is. Let your vendors know that is your company policy and your time schedule and your process. If they want to do business with you, they'll be okay with it. But have integrity, follow the process. Okay. One of the things that I want you to do, and again, getting started and going is always the hardest part. I want you to stop, because most people now have one bank account. Everything comes in and goes out of that same account. One of the things that we have to do is we have to stop using that account to make this work. One thing I want you to do is I want you to start another income account, and then all the money goes into there, and that's the only thing that's for, is money going in. Okay. But as we transition from one to the other, I want you also have to tell the bank, like, hey, bank, I'm not going to be putting any more money into this account. And any auto drafts, any auto pay, anything like that comes into there, I want you to kick it out. I'm not paying any overdraft fees on it. So once we get this done, I want you to kick that out so it goes back to the vendor. Now, the reason why we want to do this is because I want the vendor to get a notice that says this bill has not been paid, the bill won't process, et cetera. And then I want them to physically reach out to you or call you and ask for the money. And at that time, I want you to make the decision. Is this something that we need to keep? Is it something that we need to get rid of? What do we need to do with this account? If it's something you want to keep, make sure it comes out on disbursement day. Tell the people, hey, you can do this on this account. It's an auto pay, but you can only pull it out on this day. Make them set it up to your process and procedure. Again, make sure that your current operating expense account is zeroed out. As people call wondering what is up, you make that determination if you can live without it, et cetera. You make the rules. It's your business. Make your vendors work within your process. Again, I want to go over this just to make sure everybody understands the quarterly movement of money. Profit hold, you're going to take half of the profit and pay yourself, and the other half goes to profit hold. Tax hold, at the end of each quarter, you're going to take your tax and move it to the tax hold. This is for company taxes, not to be confused with sales taxes. After your taxes are paid for the year, you can do whatever you want to with the rest. Let me check time. I want to make sure we got plenty of time. Oh, I think we're good. So many of you may know or may not know, I do a podcast every week called the Weekly Blitz. It's sponsored by AutoLeap, and it's on the Aftermarket Radio Network. We have 110 episodes now, and we're adding episodes every week. You can look for it on Apple, Spotify, everywhere else podcasts can be found. You can also go to my website, autoshopcoaching.com, and it has its own player there, so you can play it on your desktop. My email address is chris@autofixsos.com, and my cell phone, which goes directly to me, is 580-491-3519. So I'm going to stop my share and bombard me with questions. I'm ready. Let's see what we can do. Let's see what we can ask or answer for everybody, because I really want you to go through this with some sort of grasp on how to do this by yourself. Obviously, there's people out there that can help you with it, but if you need help, ask for it. Okay. So any questions now?
Yeah, and feel free to drop your questions directly in the chat, and we can go over them right now. So if anyone has anything they would like to ask Chris, now's a great time to do so. Thank you.
And I know we did that really quickly, but I wanted to leave questions for the end. Again, hopefully you got the broad overview of that and how that works. So looks like, John Gurr to the panelists. Oh, hang on. That went by really quickly. So is this any different for Canada? No, John, it's not. Thanks for the question. It's the same in Canada as it is here. You're just moving your Canadian dollars around. You're allocating those, or you're making the allocations to your accounts, and you're just paying it out like that. But shouldn't work any different. Now again, if you have different tax laws or something like that, but I think as long as you have the money in the account, you should still be good. One of the slides that I took out of the 4-hour presentation and didn't put it in here as part of the process is while you're trying to do your bank accounts, I want you to talk to your accountant, tax attorney, whoever, tell them you're going to do this system and tell them to be prepared for it. You may get some kickback. You may not, but if they're not on board moving to the system and you want to move to it, get a new accountant, get a new tax attorney. It's your business. Run it the way you want it. This is your processes and procedure, and make it happen. Okay. So I'm going to go down here. What have you found to be the time burden requirement for these efforts? Curious about weighing the option of outsourcing some to the accountants. Once you get it set up, and once you've got the bank accounts ready and you've got your allocations, it takes me less than 5 minutes to actually put the money in the accounts and go from there. The pain will always be in the beginning when you're trying to get started, you're trying to get vendor switched to your new program, and when you're trying to open the bank accounts. So, and a lot of it depends on how fast you move and how quickly you get these things done. If you could spend 2 hours a week over a month, so 8 to 10 hours, and have all this done and set up and get going a month from now. You could spend 6 to 8 hours rapid fire in a week and get a lot of this done and set up. And so let me just think about this for a minute. So breaking out your income statement, if you have it available, should take less than an hour. Setting up the bank accounts and researching the bank is usually, again, maybe 2 to 3 hours. Talking to vendors, telling them how you're going to pay, and then figuring out what goes out of each account is another couple of hours. So really, once you get it set up, it should be just like, bam, a couple of minutes a week. Okay. Thanks, Jared, for that question. So Heather asked, and again, I re-clarified this, and I do need to change that. The reason why we like 2 different banks and the separate for sales tax and those holding accounts is it's out of sight, out of mind. I don't want you dipping into a sales tax account to pay for your brand new F-350, or I don't want you to go in here to do something silly or buy a tool or whatever. But instead of the 2 different banks, I'm okay with all these accounts being in the same bank, but I want 2 different logins and passwords. I want this one to be in your bookmarks bar, set off to the side, and then I want this one on your left to be your main account that you're working in. Hopefully that answers that for you. And again, if you guys have any questions or anything after we get off, shoot them to me in an email. I'm fine to answer too afterwards. So Damian Sullivan asked, for the processes and procedures that you shared today, for those of us that were late logging in, is there any way that we can view this after your session ends, or are you able to email it over? Yeah, all these sessions, as far as I know, are going to be available after the fact. And my guess is you'll probably get an email with links to everything. Or also, if you can't get it, you can shoot me an email, like I've done other web podcast webinars talking about it. If you go, I was just to see if I can find it real quick, but if you go to the weekly blitz, you have to go back through the episodes and look and see that there. Okay, and then we'll just answer the same thing. So Heather asked the question, is the chart you put up available, the demo allocation worksheet? Yes, absolutely. If you'll send me email, give me your name and give me your name and the business name, I'll create your own allocation sheet in Google Sheets, because that's how I work out of is Google. And I will send you one for your business, but you're going to have to go in and come up with your own allocation percentages, because it's just going to be the standard template for that. Damien asked again, what's my email? It's chris@autofixsos.com, chris@autofixsos.com. Oh, thanks, Will. I guess I could have done that too. I feel like I missed a question there, but maybe not. Okay. And then Heather, did I get your question answered as far as the 2 separate banks or the 2 separate accounts? Yes. Awesome. Okay. Thank you. Okay. We got a couple more minutes here. Does anybody else have any other questions?
Yeah, I see we have one attendee with your hand high. If you want to drop your question right in the chat, we can answer that right now.
While you're doing that, I'm going to look up really quick and see if I can find which podcast episode that was.
Yeah, I see it's Tyler Rump.
Okay, can you read that question for me, Will? And then I just put the link to my the desktop podcast player in there so that you guys can go to that. I also did a episode with Carm Capriotto about this in 2019 or so. So there's all kinds of stuff out there.
Yeah, Tyler, if you want to share your question directly in the chat, we can go over it right now.
So that episode that I did on there was episode number 50. And there's all kinds of other episodes in there too. Did we ever get that question?
Yeah, I think we'll give Tyler another minute there to add that to the chat. Yep, I do see we have a new question come in. What's the name of the podcast again?
It's the Weekly Blitz with Chris Cotton, and I just put it in the chat.
Awesome. Yeah. Does anyone else have any questions for Chris before we wrap up?
You're welcome, Jared. Thanks for taking time. I know everybody's busy. I know you've got all great shops to run. I appreciate you joining. I know Amplify does and AutoLeap does. And this should, Tyler said he didn't mean to raise his hand. So nope, that's really good. I got a couple more minutes. I'm going to show you this other resource real quick. If everybody bear with me. Let me share my screen real quick. So Carm is emceeing the event today, but if you ever want to know anything that I've ever put on with Carm or the Aftermarket Radio Network, you just go to the search bar and just type in Chris Cotton and hit enter, search. And this will bring up anything that I've ever done with Carm. This is a great resource for you. Ask the Coach, Shop Tour, Cash Management with Chris Cotton. This is the one that we did several years ago. All of those are in there. Same thing. If you ever have a question about service advisors, pop it in there. This will bring up everything that Carm's ever done on that topic. And it's a huge resource that's available. It's free, a lot of knowledge on there. So while we had them in, I just thought I would share that. Okay. Any other questions, Will?
Yeah, I see Scott has his hand raised right. Oh, I think his hand is no longer up right now.
Okay. Well, if there's not any other questions, I'm going to say thanks to everybody. Again, thanks to AutoLeap for allowing me to do this. If you have any questions, you've got it. My email, chris@autofixsos.com, autoshopcoaching.com, the Weekly Blitz with Chris Cotton. Hope to see you out. If you're out at, I know we just did Vision, but I'm going to be teaching a class in Burbank, California, in May 20th. I'm going to be in Long Beach, California, April 8th. I'm going to be in Denver, April 22nd. So, all those things that, you can get to. Okay. And so, okay, that's Will answering Max's question. So, all right, I'm going to leave it with you. Again, I look forward to seeing you, hearing from you, meeting you. I'm always good. It's a class, Damien. It's going to be a class that I'm doing through WorldPack. It's an 8-hour shop owners class. Again, I'm going to touch on a lot of subjects, way more breadth than depth, but you can go to the WorldPack Training Institute web page and sign up for that if you're interested, or you can email me separately and I can help you out. Okay. Anything else, Will?
I think that's it. Yeah. Thank you very much, Chris. And thank you to everyone who attended this session. We really hope that you enjoy the rest of Amplify today.
Yep. Have a great day, everybody.
Thank you. Bye.